precious metals have responded very well over the past 2 weeks, and they took a recent jump following Chair Powell's comments the other day. So I do want to spend just a couple of minutes talking about them, because that's a good segue then into the next experts commentary that I want to talk with you guys, which was the Fred Hickey interview that we did earlier this week, because Fred is a great macro analyst and his bread and butter is around the tech industry. But he delivered one of the most emphatic arguments for investing in the precious metals right now, in the mining stocks, that I've heard in a long time. So I do want to deconstruct that with you guys. But real quickly, let's just start with your thoughts on how the precious metals are reacting and maybe why they're reacting the way they're doing. Mike, why don't we stay with you on this?
Yeah, the gold is it's been pretty whippy, but it's doing wonderfully today on Thursday. We are at 1999.9 as we close here, close to 4 o'clock Eastern on the stock market. Anyway, I know that the metals market in Chicago closes, I think, at 2:30. But and I think I will try to bring up this chart, and we know we talked about it during the seminar last weekend, but it's a really nice looking chart. So, and it's a lot easier to understand when you take a look at it. But here's a daily chart of gold futures. And so this chart is going back about a year or so. But this is a big base and a very messy looking handle. But, we've had a lot of big up days here. And look at this print. I don't know if you could see that on your screen because it's small, but we just closed at 2,000 on the front month futures. If I go out a little bit to, let's say, the weekly chart, you'll see here this previous consolidation point, this breakdown, which was pretty disappointing. I should say there was actually a breakout. It looked like it was going to go above 2,000 back in March of last year, a full year ago, and then all of this disappointing movement down. It has very swiftly come up and regained this important point of 1820. The apex of this old triangle, came back and tested that. And then boom, here we are back testing the 2000 level, closing above it today. Just barely, but we're there. On the monthly chart, this is really the best looking chart of all, one of the biggest bases I've ever seen. A big cup and handle formation. Yes, there were some breakouts and fake outs, but if we really can push higher and stay above 2000, I think it's clear sailing right to 2500. And this has really been an underappreciated move. There's not a lot of talking about it. So, and the miners should do well too. They're lagging a little bit. If we look at GDX, just as an example, they are lagging a little bit. They had their own triangle in the same breakout and then breakdown move. But they're having a pretty good day, up about 2.5%. If gold can stay above 2,000, we should see GDX and other miners move right up towards 40 and then ultimately higher, playing some catch up. So overall, it's a really strong picture, I think, for gold. It's taken a lot of faith to hold through all of these moves, both for gold and gold miners. But technically, it looks really good. We remain in the position. We recommend that people own 5 or 10% of actual bullion physically, but in our portfolio, we own 10% mining shares. And we did just reset our hedge on some strength earlier this week. We have a call around part of the position, about half of the position, where we sold call options up at 37, going out 1 month to the end of April, or the third Friday in April. And we used that premium to buy puts down at 27. So we've got a lot of upside here. We only have half of our position collared, and we wouldn't be surprised to see a rapid move here once if gold stays above 2,000. We could see some real fast moves in gold mining shares. So yeah, we'll watch and wait.
All right. Well, this sounds exciting. I mean, I know that you guys have been waiting for gold to kind of find its mojo back. And I know it's early, but is this are you seeing the indicators of what you were looking for here in this recent, swift upward reaction in gold, Mike?
Yeah, I mean, it's just from pure technicals, from pure, the technicals look good. It's better because we don't hear a lot of people talking about gold. The sentiment still seems pretty neutral. Again, today was the first close above 2,000 I've seen in a long time. We haven't seen a dollar collapse. The dollar's been a little bit soft, but gold seems to have decoupled at least short term from the US dollar, which is a good sign. And we'll see what happens in the S&P. As I've said before, the S&P has some real, in my opinion, sudden downside risk. The big question is, will miners be dragged down by the market if the market tanks? We're worried about that too, which is why we keep resetting our collars. It's possible that gold can, particularly if there's more concerns about the banks or other things structurally in the economy, it's possible that gold could take off even as the S&P is tanking. And under that situation, I think the gold miners probably would not follow the market down. So we don't want to be really cute about it and be out of the miners saying that we're worried about the S&P. We choose to keep the position on and manage it the best we can with our hedges to take care of any downside surprises in the market.